5:30. Now, Fox 35 News at 5:30.
The Facebook IPO, not exactly living up to the hype, maybe. Good evening, I'm Bob Fryer.
I'm Sunny Abada. Some analysts say it's more of a whimper than a bang. That is Facebook founder Mark Zuckerberg ringing the opening bell this morning. The Facebook stocks jumping 13%, then stalling. At close, Facebook gained 23 cents on its first day as a publicly traded company. Lori Rothman is with Fox Business in New York. Tom Jelneck is with OnTarget Web Solutions here in town. Lori, we're going to start with you. How did the stock do today? Big expectations here for Facebook.
Yeah, they didn't seem to meet them, Sunny. Big disappointment. A lot of people were hoping for a big pop at the open. As you know, shares were priced at $38, and we didn't see a huge buy into the debut today. And there's a lot of talk surrounding why. And first of all, a lot of credit is being paid to the bankers, the underwriters, that they properly valued shares. So they didn't leave any money on the table, and they didn't overvalue the company. So that's the good news. The bad news is that there's a lot of concern about the NASDAQ and the way they handled this debut. That, of course, is the market site where Facebook is trading under the ticker symbol FB, and it's all computer trades. No more open outcry at the NASDAQ, and that's very concerning to a lot of people because the systems got clogged this morning.
And Tom, do you think that the less than stellar kind of opening today had anything to do with the fact that maybe people are concerned that the product could change now that shareholders can kind of have their hands in the pie?
Yes, and I think my biggest concern here is the organic nature of Facebook and how it started and how it went so viral so quick. All right, so now that it's public, is that going to change the public's perception of what the product is, and are they going to be more concerned for their privacy?
Well, that's what I was going to bring up, Tom. I mean, do you think as Facebook users we should be worried that whole thing, that whole privacy thing they've set up is changing?
Well, I think, Sonny, if you look at it this way, we're so used to using this and feeling safe, etc. But now that it's public, they've still got to make money, and they've got to figure out better and more economical ways themselves that they can feed the shareholders' pockets.
And Lori, well, how do you see this stock doing down the line? There was concern, the people, regular investors like you and me, just couldn't get their hands on it. Do you see that changing now that it's out?
All right, well, now that it's public, you have a much better chance of getting your hands on shares. But I think to your point, the big question is, and shareholders, another reason they didn't bid up shares today is because they want Facebook to prove their revenue stream. You might have heard earlier this week, GM pulled their advertising commitment to Facebook, saying, it doesn't work. There's also a lot of concern about how Facebook's going to monetize its 800, 900 million users, and how they're going to monetize the mobile platform as well. There's also no penetration right now in the Chinese market. So there's a lot of growth potential, but a lot of challenges for Facebook as to how they're going to execute that.
And Tom, we're going to give you the last thought here.
Well, I certainly think Facebook has a chance right now to be innovative, right? So what they come out with in terms of timeline, apps, etc., is really going to be a driving force as to how successful they are. They start tinkering around with privacy and start taking more and more data from people. I think they could be in trouble.
Okay. Tom Jelneck and Lori Rothman, thank you so much.
Thank you, sir.